Good evening, all. Good evening to everyone. And today we are going to discuss the last concept of FEMA, that is called external commercial borrowing, means ECB. Now, before going towards this topic, let's recall a little bit the previous concepts which we already completed in the FEMA. Like we completed the current account transaction, and current account transaction deals with the section 5, right? And section 5 deals with the current account transaction, means those transactions which hit our profit and loss part, that is called Viraj, good evening. That is called current account transaction, right? Now, in capital account transaction, section 6 is there, which talks about the concept of capital account transaction. Now, so for the external commercial borrowing, now let's start, right? So first tell me that external commercial borrowing will fall under current account transaction or capital account transaction, right? That concept of ECB, according to you, that fall under current account transaction, CRAT, yeah, CAT, that means capital account transaction. So you need to classify this transaction whether that will fall under the concept of CRAT, means current account transaction, or in capital account transaction. Simple, right? That borrowing hits our balance sheet part, and we already discussed in the balance sheet, like whatever item fall in our balance sheet part, that item, that transaction we can call as a capital account transaction. It means whenever company is borrowing externally, externally means outside India, and that person is borrowing for the purpose of its commercial business, right? That will fall under the capital account transaction. So whatever provision we are going towards the ECB, that all will fall under the capital account transaction. And for capital account transaction, specifically, there is a section 6 which deals with the capital account transaction, right? I think so that is set in your mind, like what is ECB and what are the capital account transaction. In fact, both are related. Now, suppose for example, if I want, Mansa, there is a question, where there is a question for you. If I want to build a, say for example, a sea-facing big bungalow, and for this I want to procure external commercial borrowing from outside India, whether this is allowed to me or not, whether government will allow me or not for ECB. If I want to construct a residential house, sea facing, whether this is allowed or not, right? That is not allowed. Why? Because law has provided this concept, the method of raising fund from outside India for the purpose only which is used for commercial purpose, right? If you are procuring funds from outside India and you are not using that fund into the commercial purpose under the ECB guidelines as permitted by RBI, then this is a contravention of this ECB guideline. So whatever we are procuring from outside India, either in the form of FCCB, we will go through these types of word, right? FCCB, FCEB, external commercial borrowing, or bond, that will fall under the concept of ECB, right? So now this concept is clear. Now ECB are commercial loan, right? Commercial loan means they are not for, they should be used in the business only, and that commercial loan is raised by eligible resident entities, means all are not eligible, all Indians are not eligible, all Indian resident entities are not eligible to raise the fund via ECB, means that amount should be raised by the eligible resident only, right? From recognized non-resident entity, means law has already clarified who are eligible borrower and who are eligible lenders, right? So that is also specified by the law, by the Reserve Bank of India under the ECB framework, like who are eligible residents, who are eligible lenders, who are eligible borrowers. Good evening, Purvi. And for this, you need to confirm the various parameters. Parameters in the sense requirements. Like that should be that ECB should be for particular maturity period. You cannot raise the ECB for 1 week, right? There should be a minimum maturity period for raising the ECB. And the permitted use and non-permitted end use also is specified by the ECB. You are not supposed to raise the ECB to gamble in the stock market. That is not allowed. To invest in the real estate, that is not allowed. To invest in the agriculture sector, that is not allowed. So law has already prescribed, like you are raising the ECB from the eligible lender, you are the eligible borrower as per the RBI framework, but then too, you should use that under the permitted uses only, right? And maximum, what are the maximum all-in cost ceiling? That means like whatever cost you are spending for procuring that fund from outside India, that will fall under the all-in cost ceiling, right? And the parameters giving below above apply in totality means you are supposed to satisfy all the conditions which are prescribed under the RBI framework of ECB. You need to comply all the conditions, right? I think so. That concept is clear, right? That concept is clear. We will go very slowly for this ECB part, right? First point is ECB are raised for commercial purpose. They are raised from eligible lenders. They are raised by eligible borrower. Who are eligible lenders? Who are eligible borrower? That is already predetermined by the RBI in the framework. We will go later on this list, like who are the eligible parties. But the most important part, you can raise ECB only and only for the commercial purpose, no other purpose, right? Along with this, you need to comply with the different parameters also. I think so that half portion of this chart is completed. There is no doubt. There is no doubt. We will go very slowly. You can download the that ECB charts already uploaded on the ICI portal yesterday only. So you can download from that. ECB chart. The name of the charts is ECB charts. Right. So half portion is clear, or is there any doubt? And that for the ECB applicability, that is the capital account transaction, and accordingly, Section 6 will apply for this case. I think so. This is clear. Is there any doubt, Viraj? Now, so what framework means, what bullet points they have provided regarding this framework? ECB framework, the framework means the structure. You need to comply that structure for raising loans from outside India. The framework for raising loans through ECB, here referred to as the ECB framework, comprises of following two options. Means you can procure in foreign currency or INR. How we will do this later on. Currency of borrowing, form of ECB, who are the eligible borrower, that is also defined. Who are the recognized lender, that is also defined. What is the minimum average maturity period, MAMP, that is already decided. What are the all-in cost per annum that can be incurred, maximum that can be incurred by the recognized borrower, that should be defined. What is end uses, what are the negative list, that is already determined. Exchange rate fluctuation, this is the major part for this ECB tension and all, and there should be a hedging for this fluctuation. Say for example, I took $1 crore from outside India, right? In the year 2023, when the dollar is trading at the rate of 82, right? And I took this loan, that ECB, for a period of 5 years, and say for example, for this in 2028, dollar will be trading at, say for example, 120 rupees, right? 120 rupees. Now, it means My cost of borrowing will increase. My principal amount will increase because now I need to pay $1 crore at the rate of rupees 120 dollar. There is a rate of dollar, right? So for this, there is a concept of hedging. Now you all must aware about the hedging provision, right? What are hedging? What is the concept of what is the meaning of hedging? I think so. FM, this concept directly relates to the FM part, right? So exchange rate that should be predetermined, or there may be some kind of contract should be entered, and there is a hedging provision. And change of currency of borrowing, right, that can also be point under this ECB framework, right? Now, let's go to our module part, study material part. Framework for raising loan through ECB. Transactions on account of ECB are governed by Section 6. Right? Which section deals with the ECB? Kindly comment. Which section deals with the ECB part? Which section deals with the ECB part? Section 6. Section 6 deals with the capital account transaction. Right? You need not to remember section 6, subsection 3 and clause D. Right? That is not required. Section 6 is okay, no issue that. Right? ECBs are commercial loan. They are commercial loan, and that is raised by eligible resident entities, right? They have not mentioned eligible resident individuals. They have mentioned eligible resident entities. From where they are raising? From recognized non-resident entities, means you cannot raise any amount from any one entity. From anywhere located entities, you need to take this ECB from only approved resident, non-resident entities only, and should conform to parameters such as minimum maturity period, permitted, non-permitted end use, maximum all-in cost ceiling, etc., etc., etc. That we need to check out whether in the terms of the ECB guidelines. I think so. These 4 to 5 lines are clear, right? We need to understand this concept very clearly. Can we move forward? Okay. The parameters apply in totality and not on a standalone basis, means we need to comply all the conditions for raising this ECB. Okay, Viraj. Now, the term all-in cost, right? All-in cost, we will do, this is a framework, right? This is the framework of ECB. The framework for raising loans through ECB, herein referred to as a ECB framework, comprises of following 2 options. 2 option means this is the first option and this is the second option, means you can raise the ECB in foreign currency and you can raise the ECB denominated in INR. Right? Now, what is the need of raising? Why the companies are going to raise the ECB? Is there any shortage supply? Is there any shortage of money supply in India? What is the need of ECB? Why the provision is there? What is the need? What is the need of ECB? Why we are raising the funds through these sources? Is there any shortage in the State Bank of India or Punjab National Bank? What is the logic? Say, for example, in the there is a SBI bank. Now, SBI is providing commercial loan at the rate of 8%, right? Now, and if you can recall some foreign banks, say for example, HSBC, right, or Deutsche Bank, right? Now, they are offering a loan. They are offering a loan at the rate of 3%, right? So this is the logic behind this raising of fund through foreign sources. Like this is a cheaper rate as compared to in Indian rate. So that is cheaper. So whenever there is a cost of borrowing, my cost of borrowing will drastically reduce if I took a loan from outside India rather than the Indian bank, right? Correct, Purvi? Correct. Okay, so this is the major objective of raising funds through ECB. Second objective is, suppose for example, a country is allowing for a joint venture or from some acquiring any company. So for this, you need to take the loan from outside only, right? So that will also fulfill the concept of ECB. Now, so currency of borrowing, it can be freely convertible foreign currency, or it can be in a INR denominated ECB. Foreign exchange rate, amount difference gain, etc. Correct. Forms of ECB. Now, loan including bank loan, floating fixed rate notes, bond, debenture, and which are excluded other than fully and compulsory convertible instrument, means you cannot raise the ECB via issuing of fully convertible instrument. That should be, there is no concept of equity share. If you can check here, there is no concept of dilution of equity, right? So what they have provided, loans in the form of, first is bank loan, second is floating fixed rate notes. Either it can be a floating rate, or can loan can be taken in the fixed rate. Bonds, debenture, and which are excluded other than fully and compulsory convertible instruments, right? Trade credits beyond 3 years will be treated as a ECB. Examiner will ask a MCQ on this, like trade credit will fall credit beyond 3 years, beyond 2 years, beyond 1 year, within 3 years. So you need the concept should be clear in your mind. Trade credits payable beyond 3 years will fall under the FCY denominated ECB concept. FCCB and FCEB. Now, what is the difference between FCCB and FCEB? There's a concept of FCCB and there's a concept of FCEB. Now, what is the difference between both of these terms? What is the difference between, don't say, sir, there is a C and there is a E. That difference I also know, right? So what is the difference between FCCB and FCEB? Is there any difference between? Is there any difference between FCCB and FCEB? Or both are same? Is there any difference between FCCB or FCEB, or both are same? Yes, there is a difference. Okay, so Purvi already communicated there is a difference. Now I will explain what is the difference. What happened? Like foreign currency convertible bond means that issued in the foreign currency, right? And that are convertible bond. Now convertible by the same company, right? Convertible by the same company. So that is called FCCB. Now convertible by, that is exchange by group company. Say for example, Reliance Industries Limited issues FCCB outside India. Now, for a period of 5 years, so after the expiry of 5 years, they will convert that into some equity shares or anything else, but that belongs to the equity shares of Reliance only. Then what is FCCB? Say for example, in that case, Tata Motors issue a FCEB to outside India holders, and for this, when there is a period arrived for the exchange of that bond, so that can be exchanged with subsidiary company also equity shares. I think so. Now this is clear, right? So that can be exchange of that can be exchange of subsidiary company equity shares. In FCCB concept, you need to convert the same company, that company has issued the bond. But in case of FCEB, exchange of this bond can be done into equity share, can be done of the subsidiary company, while holding company issued that bond. I think so. The doubt is clear between FCCB and FCEB. Doubt is clear? Or is there any doubt? Is there any doubt, or doubt is clear? Is there any doubt, or doubt is clear? Okay, right. So these are the two terms. Or financial lease, we all know operating lease, financial lease, and each and everything, right? So these are the particular forms for raising the subsidiary. Company should be outside India. No, it is not necessary, Janvi. Okay, Purvi, done. Your request accepted. Okay. INR denominated ECB. So loan including bank loan, floating fixed rate notes, bond, debenture, preference shares. Now, under this INR denominated ECB, they have included the word preference share. That preference share is not available in this concept, right? Other than fully and compulsory convertible instrument, trade credit beyond 3 year, financial lease, and also plain vanilla rupee denominated bond issued overseas, which can be either privately placed or listed on the exchange as per the host country regulation. As per the host country regulation. Now, so this is your currency of borrowing. You can borrow in a foreign currency. You can borrow in a INR denominated ECB, right? So this is your concept of parameter. Like you can raise the loan via loan including bank loan, fixed rate, floating rate notes, bond, debenture, other than fully convertible instrument, trade credit beyond 3 year, FCCB, FCEB, financial lease, right? And in this concept, preference share is added. And along with this preference share, there's a concept called plain vanilla rupee denominated bond issued overseas, right? I think so. You already gone through this concept in your FM subject, right? What is plain vanilla rupee denominated bond? What is plain vanilla rupee denominated bond? What is this? Which kind of bond? Is it the bond issued in a summer season only? Plain vanilla rupee denominated bond. What exactly the concept of this? So, plain vanilla bond means a simple bond, right? This is the basic type of bond. The name is prescribed in a plain vanilla bond. Plain vanilla bond is the most basic type of bond wherein an investor buys a bond. There is a fixed coupon payment at a predetermined fixed intervals, and maturity of the bond is also predetermined. Means basically, no, this is not ice cream, right? That ice cream will cost you 5 marks. Purvi. Okay, so what is plain vanilla bond? This is a pure simple bond, which that concept is already in our mind. Like that bond is a fixed maturity, that bond contains a fixed coupon rate, and that rate of interest need to be paid at a fixed interval. These are the basic concept of plain vanilla bond. What are the features? Coupon rate. Coupon rate means interest rate. Time of coupon payment are fixed. Date of maturity is fixed. Face value, par value is fixed. Each and everything is fixed. Advantages: easy valuation, reduction in volatility risk, high liquidity, straightforward cash flow, right? These are the certain advantages of plain vanilla bond. If you want to take the pick of this one, you can take this. If you want to click that image, you can. I think so. That concept of plain vanilla bond is clear. So, what are the forms of addition? What are the forms for issuing the ECB? ECB denominated forms of ECB. So there is a concept of FCY denominated ECB. There is a concept of INR. In INR denominated ECB, two types of instrument are added. First is preference shares, and second is plain vanilla bond denominated. I think so. That concept is clear. That concept is clear. First and second parameter is clear. If you can check in study material part also, so we completed the first and second serial number points, right? And these are simple also, yeah. If you want to read, you can go through this one. FCVCs are exchangeable into equity shares of another company to be called as the offered company in any manner, either wholly or partly on the basis of liquidated bonds. Okay. Now, who are eligible borrowers? Who are eligible borrowers of this FCY? All entities, law has prescribed, like all entities who are eligible to receive fixed foreign direct investment, they all are eligible by default, right? Those who are complying the FDR guidelines and they are eligible to receive they are eligible to issue any kind of securities and raising of money from outside India in the form of FDI. So that they are the by default law has prescribed that you are eligible for ECB, right? So all entities who are eligible to receive FDI. Next, certain other entities they have added further following entities are also eligible to raise ECB. First is Port Trust. Now, what is Port Trust? Port Trust means the Port Trust Board. There is a board which regulates the shipping area. There where whenever there is a port is situated, so that is called Port Trust. Units and SEZ all yes, they need to require the fund. So they are also eligible to raise the fund through ECB mode. SIDB, Exim Bank of India, Export Import Bank of India, right? So they are also categorized as an eligible borrower. So there are 5 points for the eligible borrower. First is the person, all entities who are eligible to receive FDI, Port Trust, SEZ, SIDB, Exim. PSSE, fees, right? So S stands for SEZ, S stands for SIDB, P stands for Port, or E stands for Exim, right? Exim Bank of India. So these 5 types of persons or borrowers are eligible to raise the fund through ECBs. I think so that half point of this eligible borrowers clear. We are going very slowly for understanding this ECB concept. What each and every word we are going to understand, right? I think so that particular point is clear. Yes or no? That particular point is clear. Viraj, clear or all clear? Okay. Now, for INR denominated ECB, all entities eligible to raise FCY denominated ECB means these all are by default covered in this concept. No, government is not there. Government will not going to raise these from ECBs, right? Can the government borrow from ECB? Government will not. The public sector undertaking can, right? Okay. Pranav, okay. Okay. Now, the eligible borrower, there are 5 types of eligible borrower in FCY denominated ECB. First point, who are eligible to receive FDI. Second, Port Trust, PSSE, SEZ, CDB, Exim. Right? Now, for INR denominated ECB, what they have mentioned, like who all are entity for FCY, they are eligible. Along with this, registered entities engage in microfinance activities. Microfinance activities means they are providing fund to lower income category. That is, registered not-for-profit companies, registered society, trust, cooperative, non-government organizations, they are also eligible to raise the foreign fund through ECB, right? So I think so that is also clear. So who are eligible borrower? This is our third point of ECB. This is our third point of ECB, right? This is our third point. So this is clear or not clear? Is this clear? Is this clear? Is this clear? Is this clear? Yes. Okay, fine. Right. So who are the eligible borrower? For FCY denominated 5 cases for INR. Along with these 5 cases, there is an additional case that is called microfinance activity. Registered entities are also eligible to borrow via ECB. So it is the third point also clear, sir. Maybe we get late reply. Yes, maybe I'm getting the late reply, right? So 3 points, 3 points done. Now, who are recognized lenders? Now, this is going to be the important part. The lender should be registered of, the lender should be a resident of FATF. The registered should be a lender of FATF. Right? Now, go towards this point, right? This is done, this is done. Now, all the registered lenders means the lenders should be a resident of FATF or IOSCO compliant country, including on transfer of ECB, however. Now, what exactly the concept is? FATF, Financial Action Task Force. Financial Action Task Force. Financial Action Task Force. That is the full form of FATF. Financial Action Task Force. That is the full form of FATF. Right? Now there is a IOSCO. Now IOSCO means in our country there is a authority for regulating the stock market is SEBI, right? In US there is a authority called Securities Exchange Commission, SEC, right? And all these authority, the boss of all these authority is IOSCO. Now you are understanding what is IOSCO, right? IOSCO, there's a concept, there's a website of IOSCO. The IOSCO board is the governing and standard setting body of International Organization of Securities Commission and is comprised of 35 securities regulators, right? That consist of 35 security regulators that consist of from Australia to USA, including the India also, right? So this is your IOSCO board. This is your IOSCO board. Hope so this is clear, right? And what they are doing, basically they are governing and setting standard setting body of this security market whole, right? Now, including on transfer of ECB, however, multilateral regional financial institution where India is a member country will also be considered as a recognized lender. They can also be considered as a recognized lender, multilateral regional financial institution where India is a member country, they are also eligible. Individuals as lenders can also be permitted if they are foreign equity holder or for subscription to bond debenture listed abroad, right? They are also eligible. Now, what is the meaning of foreign equity holder? What is the meaning of foreign equity holder? Foreign equity holder means the person who is dealing, the person who is a non-resident, and the person who is dealing in a stock market like a broker or investor, a big bull kind of thing, right? Now tell me in your mind the name of any foreign equity holder, a big trader, a big foreign investor. Is there any name in your mind? Is there any name in your mind? Is there any name? Shares hold in foreign companies. Simple. You can Warren Buffett, right? Warren Buffett. So he can be a foreign equity holder, right? So you can take the example of this one, right? So he can also invest in Indian company securities. I think so. B point is clear. B point is absolutely clear, or is there any doubt? B point is absolutely clear, or is there any doubt? One CA person? Purvi? Now, third point. Foreign branches, subsidiaries of Indian bank are permitted as recognized lenders only for foreign branches, right? Rakesh Jhunjhunwala is an Indian person, right? Rakesh Jhunjhunwala is an Indian person. Warren Buffett, foreign equity holder. That's why we are remembering that, right? Okay. Yes, one CA person. Okay. So C point is foreign branches or subsidiaries of Indian banks means SBI branch are permitted as recognized lenders only for FCY ECB except FCCB ECB, FCEB. Foreign branches, subsidiaries of Indian bank subject to applicable prudential norms can participate as arranger, underwriter, market makers, traders for rupee denominated bonds issued overseas. However, underwriting by foreign branches, subsidiaries of Indian banks for issuance by Indian banks will not be allowed, right? What is allowed, what is not allowed, that is specifically mentioned here. So these are the recognized lender for both these same cases, means FCY denominated or its INR. I think so. This is clear. However, underwriting by foreign branches, subsidiaries of Indian bank for issuance by Indian bank will not be allowed. Means your SBI has issued and you are the branch of SBI located outside India and you are doing the underwriting work. That is specifically not allowed. If I purchase shares of any foreign company, then I am in which category? Then you are a person resident in India only. By purchasing the shares of a foreign company, your Purvi, what is actually doubt? Recognize the concept of recognized lender is clear or not? Concept of recognized lender is clear or not? Done. Good. So first point is multilateral regional financial institution where India is a member country. Second point, foreign equity holder, Mr. Warren Buffett, sir. Third point, foreign branches or subsidiaries of Indian bank are permitted as a recognized lender in case of FCY denominated ECB, right? Now, so that is clear, right? Now, next concept is, so we completed 4 points of ECB framework. So is there any doubt in 1 to 4 points? If there is doubt, let me know. Is there any doubt? Let me know. Point number 1, 2, 3, 4. Can we proceed further? Okay, clear. Now, fifth point is quite easy one, right? What is minimum average maturity period, MAMP, for ECB will be 3 years. Means you are not eligible to take the ECB proceeds for, say for example, for 1 day, for 2 days, for 1 week, for 1 year. No, that is not allowed, right? Call and put options, if any, shall not be accessible prior to completion of minimum average maturity. Suppose, for example, you take any call and put option. Now my question arises, why you are taking the call and put options? Why you are taking the call and put options? Here we are talking about the ECB part. Here we are talking about the ECB part. Now, what is the use of this call and put options? Why they have mentioned this? What is the use of this? The concept of call and put option, why that concept is here, the reason is simple, for the hedging purpose, right? Say for example, you borrowed some amount. I am an Indian resident entity. I am an eligible borrower as per the ECB framework, and I raised 1 million USD from outside India. Now, to mitigate the exchange rate fluctuation, what I have done, I purchased a call option of USD, currency trading, right? Currency trading. To mitigate the exchange rate, I purchase a call option to mitigate my risk for the purpose of hedging. So what they have mentioned, like minimum average maturity of any instrument of ECB will be of 3 years, and if you are taking any call and put options, so that should be accessible after 3 years only. However, for a specific category mentioned below, the MAMP may be as per the prescribed here. It is not necessary to take, Pranav, it is not necessary to take the benefit, right? It is necessary to mitigate the risk, right? Now, this is the concept. ECB raised by manufacturing company up to USD 50 million or its equivalent per financial year. There is a MAMP of 1 year. Risk management strategy. Correct answer. Right? B point. ECB raised means if any manufacturing company is raising, that can be raised for 1 year up to that limit only, 50 million or its equivalent per financial year. Second point. ECB raised from foreign equity holder for working capital purpose, general corporate purpose, or for repayment of rupee loan. That is 5 years only. That is prescribed as 5 years. ECB raised for working capital purpose or general corporate purpose, or on lending by NBFC for working capital purpose or general capital purpose, that is of minimum 10 years. You need to remember these words along with this number of years. Right? If you are raising, now there's a difference. Manufacturing company, 1 year. If you are raising for these first, second, and third point, both are related to working capital. But the source of raising this different. In B point, you raised from foreign equity holder, and in this In this C point, there is no purpose specific. You can raise from anyone. ECB raised for working capital purpose or general corporate purpose. On lending by NBFC for working capital purpose or general corporate purpose. D point. ECB raised for repayment of rupee loan availed domestically for capital expenditure means I obtained a loan from State Bank. Now I need to repay that loan. So what I have done, I collected ECB, I raised fund from ECB, say for example, $10 lakh, and accordingly, I just converted that amount into INR and just I repay that amount to SBI. That is also allowed and the duration is 7 years. On lending by NBFC for the same purpose, that is also 7 years. ECB raised for repayment of rupee loan availed domestically for purpose other than capital expenditure 10 years. For capital expenditure, you raise the amount from Indian Bank, that is 7 years. Other than capital structure, other than capital expenditure, 10 years. On lending by NBFC for the same purpose, it is also 10 years. For the categories mentioned too, B to E, ECB cannot be raised from foreign branches, subsidies of Indian Bank, right? That is not allowed. The prescribed MAMP will have to strictly comply under all circumstances, right? That needs to be complied very frequently. So this is your minimum average maturity period, point number 5. Is there any doubt? Go through this. The minimum, the basic MAMP is 3 years. If you have obtained any call and put option, that can be exercised only after a period of 3 years. However, for a specific category of person, there is a different MAMP. So 5th point is clear, or is there any doubt? Fifth point is clear, or is there any doubt? Fifth point is clear, or is there any doubt? Clear, perfect. Okay, so now we are going towards the next concept of this ECB. But before going this concept, let me show you something extra, something new kind of thing, right? So this is your RBI report. If you go to the RBI website and there's a data report, so you can download this report. They have uploaded data of on ECB, FCCB for the month of March 2023. So they have uploaded for every month. Now, if you can check, okay, so there is an automatic route, right? There are two routes of raising the ECB. We will go through this one also. There is an approval route and there is an automatic route. Automatic and approval route both are different. In automatic route, they have prescribed, this is a kind of prepaid system, like they have prescribed each and everything. Like you can raise the ECB for that purpose. You can raise the ECB via this amount only, means you can fulfill the point and you can raise the ECB through automatic route. For approval route, if any of the condition of the automatic route is not yet not fulfilled, then you can take the ECB through approval route. Now, for the month of March 2023, there is a company called Somerset Therapeutics Limited, manufacturer of pharmaceutical products, equivalent amount in USD 25 lakh USD. Purpose, what is the purpose of this raising the ECB? Import of capital goods. Maturity period approx 5 years, 7 months. Foreign collaborators from whom they raised, lenders category, foreign collaborators or foreign equity holder. Second, ECB can be raised by UB Chemical India Private Limited, manufacturer of chemicals and chemical product, 15 lakh. Working capital and general corporate purpose. See, 5 years, foreign collaborators and foreign equity holders. So whatever we are reading, this is not a kind of imaginary kind of thing, that is actually implemented right across the nation. So these are the companies which raise the ECBs. Like there are approximately 132 companies are there who raise the ECB. This amount you can calculate, and this is in dollars, right? They raised only this amount in the month of March only, right? And for approval route means if you have not fulfilled any of the condition of automatic route, means then you can do via postpaid concept. Postpaid concept means you need to comply the rules and you need to take the approval of RBI and REC Limited. Financial services activity except insurance and pension fund. So they raise that amount on lending or sublending. Indian commercial bank branch abroad, subsidies of Indian bank, right? So total approximately automatic route plus approval route, total funding raises to that. And this is a huge amount. I think so that help you to understand what is the logic behind this ECB. And this is the data of RBI. Automatic route, approval route. I think so that makes a little bit clear also the concept of. Okay, now move towards the next thing from our module part. Okay, all-in cost ceiling per annum benchmark rate plus 450 basis point spread, right? So this is your all-in cost. Other cost, prepayment charges, penal interest, if any, for default or breach of covenants should not be more than 2% over and above the contracted rate of interest on the outstanding principal amount and will be outside the all-in cost ceiling, right? All-in cost ceiling. So how is RBI having this data? Do the company have to tell RBI for the purpose of Pranav? When there is a FEMA, there is a RBI, right? So RBI is the authority who is controlling the FEMA. I think so now your doubt is clear. Okay. Now, next is what? And uses negative list. Means you cannot use the ECB for these purposes. The negative list for which the ECB proceeds cannot be utilized would include the following. Examiner will ask a separate question on this concept only. This is a rate of interest. Basis point, rate of interest. Viraj, this is a rate of interest. Like in Indian types, there is a MIBOR, and there outside there is a LIBOR. This is mentioned, right? Benchmark rate in case of FCY, ECB, or TC refers to 6-month LIBOR rate of different currency. In India, we are calculating this rate of interest via MIBOR, right? In outside country, they are using the LIBOR concept, right? Any other 6-month bank interest rate applicable to the currency of borrowing. For example, Euribor benchmark rate in case of rupee denominated ECB TC will be the prevailing yield of government of Indian security of corresponding maturity, right? So that is clear. Okay, so what is end use? That you need to remember. First is real estate activity, not allowed. Second is investment in capital market, that is also not allowed. Equity investment, that is not allowed. If you are doing cash trading also, that is not allowed. Working capital purpose, except in case of ECB mentioned at point this. General corporate purpose, except in ECB mentioned at point this. 5th B, 5th C, right? 5th B, 5th C means this point. 5th B, 5th C, right? So other than this purpose, that is not allowed. Repayment of rupee loan, except in case of ECB, mentioned at VD means that is allowed, except that is allowed, and for other than this, not allowed. On lending to entity for the above activities, except in case of ECB raised by NBFC in 5th C, 5th D, 5th E, that is allowed, otherwise not allowed, right? So this is your end uses means negative list. Negative list means you cannot use the ECB proceeds for this purpose. I think so that is clear. Point number 8 is clear. Examiner can ask you a separate question on this. Point number 8 is clear. Point number 8 is clear. Right? Negative list, real estate not allowed, investment capital market not allowed, equity investment not allowed, working capital, general corporate purposes, repayment of rupee loan, except the purpose specified in 5th point. That is all allowed, otherwise not allowed, right? And on lending to entities for, on lending the entities for, right? On lending to entities for the above activities, that is not allowed, except for this amount that is allowed, right? So this is your end users negative list. Exchange rate. Now exchange rate is what? Change of currency of FCY ECB into INR ECB can be at an exchange rate prevailing on the date of agreement for such change between the parties concerned. Means the agreement date is the date on which we will take the prevailing rate, which is less than the rate prevailing on the date of the agreement if consented to by the ECB lender. Means that should be depend upon the agreement. For conversion to rupee, the exchange rate shall be the rate prevailing on the date of settlement, right? That is your exchange rate. I think so that concept is clear. That concept is clear, or is there any further doubt? That concept is clear, exchange rate is clear. In ECB, in ECB, there can be an agreement also, right? The rate can be less than the prevailing market rate. But in FCY INR, that rate will be settlement date. Now, hedging provision. The entity raising ECB are required to follow the guidelines for hedging issue, if any, by the concerned sector prudential regulator in respect of foreign currency exposure. Like, for example, infrastructure space companies shall have a board approved risk management policy for this type of company. Further, such companies are required to mandatory hedge 70% of the ECI exposure in case the average maturity of ECB is less than 5 years, right? That is mentioned in their agreement, in their company AOA article, like you have the board approved risk management policy, and accordingly whatever amount you are raising via ECB, 70% should be hedged. It should be properly hedged. Overseas investors are eligible to hedge their exposure in rupee through permitted derivative product with authorized dealer category 1 bank in India. The investor can also access the domestic market through branches, subsidiaries of Indian bank abroad, or branches of foreign bank with Indian presence on a back-to-back basis. Means that is a hedging provision is clear. Like if you are an infrastructure space company, 70% should be whatever amount you are raising via ECB, 70% should be perfectly hedged. Overseas investors are eligible to hedge their exposure in rupee denominated permitted derivative product, right? Overseas investor, they can also hedge with the derivative product with as authorized by authorized dealer category 1 bank in India. The investor can also access the domestic market through branches, subsidiaries of Indian bank. Directly not allowed. You can access via the Indian bank. Now, 70% hedging requirement is complied with during the currency of ECB, and accordingly you need to report that position to RBI in form number ECB2. The following operational aspect with respect to hedging should be ensured. Now, for hedging, you need to remember these points. Coverage. The ECB borrower will be required to cover the principal. That should be hedging, right? P plus I. As well as the coupon. Coupon means interest. Through financial hedge, the financial hedge for all exposure on account of ECB should start from the time of each such exposure, means the date the liability is created in the books of borrower. When I entered the transaction in my liability side as respect of the loan amount, that can be treated as a liability page, liability date. Tenure and rollover. A minimum tenure of 1 year for the financial hedge will be required with periodic rollover. You need to provide the rollover. Rollover means carry forward. Rollover means carry forward. And duly ensuring that the exposure on account of ECB is not unhedged at any point during the currency of ECB means that should be properly hedged. Natural hedge. Natural hedge in lieu of financial hedge will be considered only to extent of offsetting projected cash flows, revenue in matching currency, net of all projected outflows. Means natural hedge means everybody knows natural hedge. What is natural hedge? What is natural hedge? What is natural hedge? Everybody knows that. What is natural hedge? I think so. There's a concept in your FM. Natural hedge means whatever inflow you are receiving and whatever outflow you are getting, that should be adjusted. That is called natural hedge. Suppose, for example, in the year 2018, I need to repay that ECB amount, and accordingly 2017, I need to receive certain amount from outside India also. So that is specific in my mind, that I need to pay in 2018 $1 crore and I need to receive in 2017 or 2018 or 19, say for example $90,000. So I need to that particular that up to the fixed amount, whatever I am receiving and what I need to pay, that fixed amount is naturally hedged. For this purpose, an ECB may be considered natural hedge if the offsetting exposure has a maturity or cash flow within the same accounting year. Any other arrangement structure where revenue are indexed to foreign currency will not be considered as a natural hedge. That all will not covered under the natural hedge, right? So this is your natural hedging concept. So for hedging, you need to remember the coverage part, tenure part, and whether it's a natural hedge. Change of currency of borrowing. Change of currency of ECB from one freely convertible foreign currency to any other freely convertible foreign currency as well as INR is freely permissible. Change of currency from INR to freely convertible foreign currency is not permissible. That is allowed and that is disallowed. Note, the ECB framework is not applicable in respect of investment in non-convertible debenture in India made by registered FPI, lending and borrowing under the ECB framework by Indian Bank and the branches subsidiaries outside India will be subject to guidelines issued by Department of Banking Regulation of RBI. Further, other entities raising ECB are required to follow the guidelines issued, if any, by the concerned sectorial and prudential regulator. They need to comply this one, right? So that is your ECB concept, and this is your framework with other points also, right? Parking of proceeds of ECB, that is also different points. which is mentioned, but till 9 points, is there any doubt? I know this is little bit complex concept, but whatever I have tried, I tried to summarize the best possible way, in a best possible way, right? So is there any doubt in till 9 points? Is there any doubt? Is there any doubt in 9 points? You need to go through 1 or 2 to 3 times with this ECB. And what happened? Suppose, for example, there are 9 points in this till whatever we have read or whatever we have gone through. In total, there are 9 points, right? So what you will do? I know you can easily recall 7 points from this 9 points. For 2 points, you need to put your extra efforts, right? Okay. So 9 points is clear, right? Now, limit and leverage. Under the aforesaid framework, all eligible borrowers. Who are eligible borrowers? Who are eligible borrowers? Who are eligible borrowers? Eligible borrowers means eligible borrowers. Recall as soon as possible. Who are eligible borrower? Who are eligible borrower? Eligible borrower means the person who is entitled to receive the FDI. Second point. Second point. 4 points are there. If you can recall this, PSSE, Peace, Port Trust, SEZ, SIDB, Exim Bank, right? These are the eligible borrower. Can raise ECB up to USD 750 million or equivalent per financial year under the automatic route. That limit will apply per financial year. Automatic route 750 million. If you can check in this RBI report, nobody has received more than this amount, right? 750 million per financial year per person that is allowed, right? Per financial year per person that is allowed. If you can check, this is automatic route, right? If you can check, nobody has received more than this amount, right? Further, in case of FCY denominated ECB raised from direct foreign equity holder Warren Buffett, the ECB liability equity ratio for ECB raised under the automatic route cannot exceed 7:1. That should not exceed 7:1, right? However, this ratio will not be applicable if the outstanding amount of all ECB including the proposed one is up to USD 5 million or its equivalent. You need to remember this. Right? So there's a ratio they have prescribed that cannot exceed 7:1, but the ratio will not apply if the amount is up to USD 5 million or its equivalent. Further, the borrowing entity will also be governed by the guidelines on debt equity ratio issued, if any, by the sectorial prudential regulator concerned. Right? Limit and leverage is clear. 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 Okay. Okay, Namrata. This is a study material. Issuance of guarantee, etc., by Indian banks, financial institution. Issuance of any guarantee by Indian banks, all India financial institution, NBFC relating to ECB is not permitted. That is not permitted. Right? Next. Further, financial intermediaries like Indian banks, all Indian financial institution or NBFC shall not invest in FCCB, FCEB in any manner whatsoever. And this point we already completed. Like sir, I have a doubt out of context. Purchase of immovable property is capital account transaction. Yes, this is capital account transaction. Parking of ECB proceeds. Now, issuance of guarantee by Indian bank financial institution is clear. Is it clear or not? Is it clear or not? Issuance of any type of guarantee by Indian bank, all India financial institution, NBFC relating to ECB is not permitted. Right? Is this clear or not? Clear. Okay. Next is parking of ECB proceeds. ECB proceeds. Okay, we will do one thing. We will take a break after this topic. Okay. So parking of ECB proceeds means where we can use the ECB. ECB proceeds are permitted to be parked abroad as well as domestically in the manner. Means we can raise the ECB from outside India and we can acquire any other company outside India also. That is also permissible. Or you can take back the ECB to India also. So parking of proceeds of ECB abroad or domestically. First, we will read to the abroad part. ECB proceeds meant only for foreign currency expenditure can be parked abroad pending utilization. Till utilization, these funds can be invested in the following liquid assets. Now, what is liquid assets? Deposits or CDs. CDs stands for Certificate of Deposit issued by the RBI or other product offered by bank rated not less than, this is the rating concept, right? Not less than AA minus by Standard and Poor means the rating agency is not provided this, the rating below this, that is minus AA minus. Treasury bill or other monetary instrument of 1 year maturity having minimum rating as above. This is the minimum rating. Deposit with foreign branches, subsidies of Indian bank abroad. So that is the parking of proceeds. Now, for domestically, ECB proceeds meant for rupee expenditure should be repatriated immediately for credit to Indian rupee with authorized dealer category bank in India. You need to provide that amount. ECB borrowers are also allowed to park ECB proceeds in term deposit with authorized category 1 for a maximum period of 12 months cumulatively. These term deposits should be kept in unencumbered position, means without any charge. Right? Unencumbered means free from charge, without any charge. I think so that concept is clear. Parking proceeds is clear. Parking proceeds is clear. So where you can park, for example, in case of abroad means we raise the ECB from outside India and we are going to utilize that amount in outside India also. So what the law has prescribed, till utilization means the amount which you have kept outside India for the purpose of utilization, till utilization that can be invested in the liquid assets. 1, 2, 3. 1, 2, 3 means deposit with the branch, treasury bill issued by the Reserve Bank of India, other money market instrument not having maturity not more than 1 year, or with this minimum rating, that is double A minus, not below that, right? And parking of ECB proceeds domestically. Domestically means India. So you can make a fixed deposit of this, right? So that is allowed, I think so. So that is your what parking of ECB proceeds. So is there any doubt till this topic? If you have any doubt, let me know. If you have any doubt, let me know. If you have any doubt, let me know. Parking of ECB proceeds, is there any doubt? Parking of ECB proceeds, this is a simple topic. This is a simple topic. Parking of ECB proceeds, is there any doubt? Okay, Viraj. Okay. So now this is clear, right? Now we will do one thing. We will take a break till 7:30, right? Once, if you want to, if you have any doubt, then you can let me know after the break also. First, we will complete the doubt session of this one ECB. Then we will move towards the ECB and other topics. Okay. So we will take a break of 15 minutes. Relax yourself. Okay. Okay. So next concept is procedure for raising ECB, right? So this all Purvi, I am not taking SFM. That person is different, and I am separate legal entity. Okay. So procedure of raising ECB. All ECB can be raised under the automatic route. We already checked this chart of the RBI data report that can be raised from ECB from automatic route or via approval route also, right? All ECB can be raised under the automatic route if they conform to the parameters prescribed under this framework. For approval route cases, approval route means for automatic route, everything is prescribed on the paper. So if you fulfill all the conditions, you can raise the ECB through automatic route without, you need not to take approval from any person. And if you fail to fulfill any of the condition as mentioned under the automatic route, in that case, you need to opt for approval route. For approval route cases, the borrower may approach the RBI. You need to take the approval of RBI with an application in prescribed form ECB, for examination through the authorized dealer category 1 bank. Such cases shall be considered keeping in view the overall guidelines, macroeconomic situations, merits of the specific proposal. ECB proposal received in the Reserve Bank above a certain threshold limit, refixed from time to time, would be placed before the empowered committee EC set up by the Reserve Bank. Means Reserve Bank is not doing that function of checking and all. That is transferred to the empowered committee. The empowered committee will have external as well as internal members. Reserve Bank will take a final decision in a case taking into account recommendation of the empowered committee. So empowered committee will check all the requirements under the approval route and they will present their recommendation to the RBI. Entities desirous of raising ECB under the automatic route may approach the authorized dealer category 1 bank with their proposal along with the duly filled in form ECB, right? So under this paragraph, you need to check, like if you are raising the fund from automatic route, you need to confirm the parameter. For approval route, you need to approach by filing an application to the RBI, application number form ECB. Now, RBI is not doing anything. They just transfer their power to empowered committee. Empowered committee will review all your proposal and they will recommend to the RBI. Last decision will be taken by the RBI only. Reporting requirement. Borrowing under the ECB framework are subject to following reporting requirement apart from any specific reporting requirement under the framework. So first is LRN. LRN stands for loan registration number. Any drawdown in respect of ECB should happen only after obtaining the LRN from Reserve Bank. To obtain the LRN, borrowers are required to submit duly certified form ECB. You need to submit that ECB form, which also contains terms and conditions of the ECB in duplicate, means 2 copies. To the designated AD category 1 bank, means we need to deposit the document to the AD category 1. In turn, the AD category 1 bank will forward 1 copy to the director, Reserve Bank of India, Department of Statistics, Information Management, ECB Borrowing Division, BKC Complex, Mumbai. This. Copies of loan agreement for raising ECB are not required to be submitted to the Reserve Bank. That copy is not required, need to be submitted to the Reserve Bank. This is your first reporting requirement, means reporting of LRN, right? So you can submit the documents in duplicate copies and they will provide you the LRN. Second, changes in terms and conditions of ECB. Changes in ECB parameter in consonance. Consonance means in parity with the ECB norms, including reduced repayment by mutual agreement between the lender and borrower, should be reported to DSIN. There is a system through which form ECB at the earliest in any case not later than 7 days from the changes. Means whenever there's an agreement between the lender and borrower for any changes, so that should be effective, that should be updated within 7 days. While submitting the revised form ECB, the changes should be specifically mentioned in the communication. You need to provide the changes specifically. Monthly reporting of actual transactions. So these are the first 2 points of reporting. So is there any doubt in the reporting part? Is there any doubt in first and second point of reporting? Is there any doubt? Is there any doubt in the first and second point of reporting? Is there any doubt in first and second point of this reporting part? First is you need to obtain the LRN from bank. For this, you need to submit a form in duplicate copies. Okay. Second, if there is any change in the agreement between the lender and borrower, that should be communicated within 7 days with the revised ECB form. Third, monthly reporting of actual transactions. The borrowers are required to report actual ECB transaction through form ECB2 return through the AD category 1 bank on a monthly basis so as to reach DSIM within 7 working days from the close of the month to which it relates. Changes, if any, in ECB parameter should also be incorporated in form ECB2 return. Right? So means whatever changes you have made, you need to submit within 7 days. From the close of the month to which it relates, changes, if any, in the ECB parameter, that should also incorporated in form ECB2 return. Right? So this third point is also clear. Late submission fees for delay in reporting. They will take a fees from you. Any borrower who is otherwise in compliance with the ECB guidelines can regularize the delay in reporting of drawdown of ECB proceeds after obtaining LRM and delay in submission of Form 2 by payment of late submission fee. Government is ready to accept the fees, late fees, right? This is the favorite concept. The borrower, through its authorized dealer, may pay the late submission fees by way of demand draft in favor of RBI or any other mode specified by the Reserve Bank. Means you need to make the payment with the RBI only. Form ECB and Form ECB2 returns containing reporting confirmation shall be treated separately. Both should be treated separately. Non-payment of LSF will be treated as a contravention of reporting provision and shall be subject to compounding adjudication as provided under the FEMA rules, regulations, and right. So this is the concept of LSF, late submission fees for delay in reporting part. Now SOP. SOP means procedure. You need to follow the procedure part. SOP for untraceable entities. Untraceable entities means the following SOP has to be followed by designated AD category 1 bank in case of untraceable entity who are found to be in contravention of reporting provision for ECB by failing to submit prescribed return under the ECB framework either physically or electronically for the past 8 quarters. That entity we can call as a untraceable entities. Right? Who fails to submit their prescribed return for 8 quarters or more. That entity we can call as a untraceable entity. So, so what is untraceable entity? I think so that is clear, right? What is untraceable entity? That is clear. Definition. Any borrower who has raised ECB will be treated as untraceable entity if the entity, auditor, director, promoter of entity are not reachable, Not responsive, no reply, in negative over email, letter, phone for a period of not less than 2 quarters. With the documented communication reminders numbering 6 or more. So law has specified each and everything. Like you have not responded for 2 quarters, no call, no reminder 6, and we remind for 6 or more times. And it fulfills both of the following conditions, this and this, then will be treated as a untraceable entity. Entity is not found to be operative at the registered office address as per the records mentioned under the AD Bank category, or not found to be operated during the visit by the officials of AD Bank. So you are not available. Yeah, entity have not submitted statutory auditor certificate for last 2 or more years. So examiner can ask you write a short note on untraceable entity. So you can just pick up these points from untraceable entity, and accordingly you can mention, right? What are untraceable entity? How you will identify that that particular entity under the ECB is a untraceable. So now this is clear. Examiner can ask question from this part also. Is there any doubt? Is there any doubt? Is there any doubt? Is there any doubt? Right? So this is clear. Perfect. Okay. So these are untraceable entity action. Now, what actions can be taken? The following actions are to be undertaken in respect of untraceable entity. Now, compliance part. What are the contravention part? File revised form ECB if required, and last form ECB to return without certification from company with untraceable entity written in bold of the top. By you need to mention on the top of this letter untraceable entity. The outstanding amount will be treated as write-off from external debt liability of the country, but may be retained by the lender in his books for recovery through court mode. Right? No fresh ECB application by the entity should be examined, processed by the AD Bank. No fresh ECB. Obviously, yeah, they will not allow for fresh ECB. Directorate of Enforcement should be informed whenever any entity is designated ED, Enforcement Directorate, money laundering, prevention of money laundering will apply. No inward remittance or debt servicing will be permitted under auto route. Automatic route will not apply, right? So these are the concepts, these are the procedure for identifying that untraceable entity. And after tracing the entity is an untraceable entity, what actions you can take on this untraceable entity? I think so. This is important point. Examiner, if an examiner can ask this question of 5 marks, I can assure you 50% public will not apply. Right? So examiner can ask a separate question from this untraceable entity, and content is proper, right? Okay. Next is power delegated to AD category 1 bank to deal with the ECB cases. The designated AD category 1 bank can approve any request from the borrower for changes in ECB except for FCCB, FCEB. Yes, many students are even escape this provision. Duly ensuring that change condition, including change in the name of the borrower, lender, transfer of ECB proceeds, other parameter, comply with the ECB norms and with the consent of lender. Further, the following can also be undertaken under the automatic route. First is change of AD category 1. Thank you, Purvi. Change of the AD category 1 bank. AD category 1 bank can be changed subject to obtaining NOC from the earlier AD category 1. This is basic concept. Cancellation of LRN, loan registration number. The designated AD category 1 bank may directly approach DSIM for cancellation of LRN for ECB contracted, right? For ECB contracted. Right? I think so. Is there any problem? Is there any problem? Right? Next. Subject to ensuring that no drawdown against the said LRN is take place, the monthly ECB2 return till date you need to allot the LRN and submit it to DSIM. Right? These are the officers. Department of Statistics and Information Management. DSR, the full form of DSIM, Department of Statistics and Information Management. Okay, post. Now, refinancing of existing ECB. Refinancing of existing ECB by fresh ECB, provided the outstanding maturity of the original borrowing. Weighted outstanding maturity in case of multiple borrowing is not reduced. All-in cost of fresh ECB is lower than the all-in cost of the weighted average cost in case of multiple borrowing of the existing ECB, means your cost should be minimum. Further, refinancing of ECB raised under the previous ECB framework may also be permitted, subject to the additional ensuring that the borrower is eligible to raise ECB under the extant framework. Raising of fresh ECB to part refinance the existing ECB also permitted, subject to some conditions. Right? Maharatna. Perfect. Indian banks are permitted to participate in refinance of existing ECB only for highly rated corporates, Reliance, Tata Motors, not for Suzlon, not for Kingfisher, not for Jet Airways, right? Or for Navaratna and the Maharatna public sector undertaking, right? You can refinance the existing ECB for them only. I think so. That concept is clear, right? That concept is clear. Okay, conversion of ECB into equity. External commercial borrowing into equity. Conversion of ECB, including those which are matured, means duration is complete, but remaining unpaid, into equity is permitted subject to following conditions. Means the company which has raised, say for example, Reliance has raised ECB from outside India. Now, if the ECB tenure is complete, the Reliance wants to adjust that amount with the equity shares. So what are the conditions? First point, the activity of the borrowing company is covered under the automatic route for FDI. Means if your company that raised the ECB and your company is not covered by the FDI, you cannot issue the equity shares, because FDI means outside investor invest in your equity shares, or government approval is received whenever applicable for equity participation as per the extent FDI policy. Second point, so first point is your company is eligible for FDI requirement. Second point, the conversion, which should be with the lender consent or without any additional cost, should not result in contravention of eligibility, breach of applicable sector cap on the foreign equity holding under the FDI policy. That should not be there, right? Means whenever we are converting the ECB proceeds in equity, we need to take the approval of lender's consent, because there may be some ratio exchange also. Applicable pricing guidelines for shares are complied with. In case of partial or full conversion of ECB into equity, the reporting to the Reserve Bank will be as under. For partial conversion, means whole amount of ECB is not get converted, half amount will get converted. The converted portion is to be reported in form FCGPR, prescribed for reporting of FDI flows, while monthly reporting to DSIM in form number ECB2 return with the suitable mark. You need to put that mark ECB partially converted to equity. For full conversion, the entire process, the entire portion is to be reported in FCGPR, while reporting in DSIM in form should be done with the remark ECB fully converted to equity. Subsequent filing of form ECB2 is not required. That is not required. You need to provide the declaration part. For conversion of ECB into equity in phases, reporting through form FCGPR and form ECB2 return will also be in phases. Means if you are, suppose for example, out of this 100 crores, you are just converting 10 crores right now. So you need to file the form in phases also. If the borrower concerned has availed of other facility, credit facility from Indian bank system, including foreign branches, subsidiaries of Indian bank, the applicable prudential norm issued by the Department of Banking Regulation, RBI, vagera, you need to comply. Consent of other lenders, if any, to the same borrower is available. At least information regarding conversion is exchanged with other lenders of the borrowers. For conversion of ECB dues into equity, the exchange rate prevailing on the date of the agreement between the parties concerned for such conversion or any lesser rate can be applied with the mutual agreement with the ECB lender, right? There should be a mutual agreement. It may be noted that fair value of equity shares shall be worked out with reference to the date of conversion only, right? So these are the 6 points under this 4th point, that is conversion of ECB into equity. You need to go through 2 to 3 times to understand this better, proper concept. Right? So is there any doubt in understanding this concept? Maybe you will not retain that portion right now, but if you go through the 2 to 3 times, you can retain very well maximum concept of this. Yes, is there any doubt? Is there any doubt till this concept? Is there any doubt? Is there any doubt till here? Okay. Security for raising ECB. Security for raising ECB. AD category 1 bank are permitted to allow creation, cancellation of charge on immovable assets. Movable assets, financial securities, issue of corporate and personal guarantee in favor of overseas lender, security trustee to ensure the ECB to be raised or raised by the borrower subject to satisfying themselves with the requirement. First point. The underlying ECB is in compliance with the extent ECB guidelines. You need to comply the ECB part. Second, there exists a security clause in the loan agreement, means guarantee part, requiring the ECB borrower to create, cancel charge in favor of overseas, means you can create the charge also, you can cancel the charge also. Security trustee on immovable assets or movable assets, financial securities, issuance of corporate and personal guarantee. And NOC as applicable from the existing lenders in India have been obtained in case of creation of charge. When the aforesaid stipulations are met, stipulation means conditions. The AD category 1 may permit creation of charge on the movable assets, immovable assets, financial securities, issue of corporate and personal guarantee during the currency of ECB with security co-terminated with the underlying ECB. Subject to following. First is creation. You are creating a charge on the immovable assets, right? The arrangement shall be subject to following. Such security shall be subject to the provision contained in Foreign Exchange Management, Acquisition and Transfer of Immovable Property Rules 2000 Regulation 2017, means you need to comply that foreign FEMA regulation also. The permission should not be constructed as a permission to acquire immovable property in India by overseas lender, means we are creating charge in favor of outsider lender. It does not mean that you are acquiring the property in India through this charge. In the event of enforcement, invocation of the charge, the immovable assets, property will have to be sold only to the person resident in India, and the amount which you received from PRI, that should be disbursed to the ECB lender. This is the important point. Means if a resident Indian entity fails to repay the ECB proceeds, now next, what is the next step? The ECB lender can sue in the court, and accordingly court will allow to sell the assets. Now the important point, law has clearly specified that assets should be sold to the, to whom? It should be sold only to the person resident in India, and whatever amount you collected after the sale of assets, that should be disbursed to the ECB lender. I think so. This is important point, right? Examiner can create a question on this also. And if you don't know this line, then you can say yes, the ECB holder can easily sell the assets and all. He can also acquire the assets. Creation of charge on movable assets. In the event of enforcement, invocation of charge, means default by person, the claim of the lender, whether the lender take over the movable assets or otherwise, will be restricted to the outstanding claim against the ECB. Encumbered matlab with charge. Encumbered movable assets may also be taken out of country, subject to getting NOC from domestic lenders, if any. Creation of charge over financial securities. The arrangements may be permitted, subject to the following. Now you are creating a charge on financial securities. So first is pledge of shares of the borrowing company, which are held by a promoter as well as in domestic associate company of the borrower is permitted. We can pledge on the other financial securities like bond, debenture, government security, government savings certificates, deposit receipts of securities, units of UTI, any other mutual fund standing in the name of ECB proceeds. Borrower is also permitted. In addition, security interest over all current and future loan assets and all current assets, including cash and cash equivalent, including rupee account of the borrower with the authorized dealer in India, standing in the name of the borrower promoter, can be used as a security for ECB proceeds. Or in case of invocation of pledge, means transfer of financial security shall be in accordance with the FDI FII policy scheme according to this provision. Right. So this is your invocation part. This is a creation of charge and security for raising ECB part. I think so. This point is most important in this concept. Very, very important. How the charge is going to be realized. Next is issue of corporate and personal guarantee. The arrangement shall be subject to the, you need to pass the board resolution. For the issue of corporate guarantee for company issuing guarantee, in that case, you need to specify the officials who is authorized to execute such guarantee on behalf of company or an individual capacity shall be obtained. A specific request from individuals to issue personal guarantee indicating details of ECB shall be obtained. Such security shall be subject to the FEMA Guaranteed Regulation 2000 as amended from time to time. ECB can be a credit enhanced, guaranteed, ensured by overseas parties only if they fulfill the criteria of recognized lender under the ECB guidelines. Right? So this is your charge part, this is your security part, this is your sixth point, fifth point, right? Is completed. So is there any doubt? You need to read it again, right? Additional requirement. While exercising the delegated power, the authorized dealer category 1 bank should ensure that. And these are the miscellaneous points. The changes permitted are to be confirmed with the applicable ceiling guidelines. ECB continues to be compliant with the applicable guidelines. It should also be ensured that if the ECB borrower has availed of credit facility from an Indian banking system, including foreign branches, subsidiaries of Indian bank, any extension of tenure of ECB, this needs to be checked. The changes in the terms and conditions of ECB allowed by the AD under the power delegated or changes approved by the Reserve Bank should be reported to DSIM. Along with this, ECB2 return. Special dispensations under the ECB framework. Now, these are company-specific ECB facilities, right? Now, for oil marketing, OMC company, BPCL, RIL, right? These are the OMCs. Notwithstanding the provision contained in para 2.1, 8.2.1, 10th point, 2.2 above, public sector oil marketing company, OMC, can raise ECB for working capital purpose with a minimum average maturity period of 3 years. Means this is overriding provision, special power, special privileges provided to OMC companies from all recognized lender under an automatic route without mandatory hedging or individual limit requirements. The overall ceiling for such ECB shall be USD 10 billion or equivalent. However, OMC shall have a board approved forex mark-to-market procedure, prudent risk management policies for such ECB. All other provision under the ECB framework will be applicable to such ECBs. ECB facility for startup, and that was for OMC and that is for startup. So examiner can ask a separate question on the startup part. What are the ECB guidelines for startup? AD category bank are permitted to allow startups to raise ECB under the automatic, and many startups are running on this only, foreign funding and all, right? Eligibility. An entity recognized as a startup by the central government on the date of issuing ECB means they are registered with the DIPB, Department of Promotion and Development. Maturity, minimum average maturity 3 years. Recognized lender. Lender's investor shall be a resident of FATF compliant country. Means he does not belong to Pakistan and all. However, Pakistan is not a FATF compliant country for raising this ECB. Remember this. However, foreign branches, subsidiaries of Indian banks, overseas entities in which Indian entity has made overseas direct investment as per the extent ODI investment policy will not be considered as a recognized lender under this framework. That will not considered as this one. Forms. The borrowing can be in the form of loans, non-convertible, optionally convertible, partially convertible preference shares by a startup. So that's why compulsory CPPS, compulsory it's CCPS. CCPS. If you can go through any of the document of the startup who are raising the fund, they are issuing the CCPS, compulsory convertible preference shares, that will be converted in the future in equity shares. Currency. The borrowing should be denominated in a freely convertible currency or Indian rupees or in combination thereof. In case of borrowing in INR, the non-resident lender should mobilize INR through swap or outright sale undertaking through an AD Category 1 bank, means through any contract entered between them. Amount. Borrowing per startup will be limited to USD 3 million equivalent per financial year, either in INR or any convertible foreign currency or a combination of both. This is the most important point, amount wise. All in cost, mutually agreed, end user for any expenditure in connection with the business of the borrower, not other than this purpose, commercial. Conversion into equity. Conversion into equity is permitted subject to the regulation applicable to foreign investment in a startup. Suppose, for example, if there is any regulation that allows a person outsider can invest maximum 25% of the paid up share capital, so that is the limit, right? Security. The choice of securities to be provided to the lender is left to the borrowing entity. Which type of security he wants to. Security can be in the nature of movable assets, immovable assets, intangible assets, patent, IPR, financial securities, etc., and shall comply with the FDI requirement, FPI requirement. Hedging. The overseas lender, in case of INR denominated ECB, will be eligible to hedge its INR exposure through permitted derivative product with AD Category 1 bank in India. The lender can also access the domestic market through branches or subsidiaries of Indian banks abroad or branches of foreign banks with Indian presence on a back-to-back basis. So this is the hedging provision. Conversion rate. The INR conversion will be at the market rate on the date of the agreement. Whatever is the date of the agreement, whatever rate is prevailing on the date of the agreement, that is your rate. Other provision. Other provision like parking of ECB proceeds, reporting requirement, power delegated to AD bank, borrowing by entities during investigation by ED, conversion of ECB into equity will be considered under ECB framework. Right? Borrowing by entity under investigation. This is going to be the important point. Important one, right? All entities against which an investigation, adjudication, appeal by law enforcing agency for violation of any provision under the FEMA is pending. Means you contravene any provision of this FEMA. And against you, there is an investigation, there is an adjudication part, there is an appeal is pending. Law has permitted that defaulting person also may raise ECB as per the applicable norm if they are otherwise eligible. Notwithstanding the pending investigation means if you have not gone through this line, an examiner can ask, like XYZ company, there is a complaint under the FEMA is filed, there is an appeal under this FEMA is filed, and now whether that defaulting XYZ Limited can raise the fund from ECB. So if you have not gone through this ninth provision, then accordingly you can say no, that is not allowed, right? Principle of natural justice and each and everything is there, but law has clearly specified you can raise that up. The outcome of such investigation without prejudice to the outcome of it means if the outcome is against you, then too there is no problem in raising the ECB. The borrowing entity shall inform about pendency of such investigation. Accordingly, in case the application where the borrowing entity has indicated about the pending application, the AD Category 1 bank, Reserve Bank, while approving the proposal, intimate to the agency concerned by endorsing a copy of the approval letter. You need to intimate the lender also, right? Law and government is clearly specified. If the lender has no problem with the investigation part, with the adjudication part, with the appeal part, then we don't have any problem because you are using the outsider fund only. Okay. ECB by entities under restructuring, ECB facilities for refinancing stressed assets. Remember, examiner can ask a separate question this part also. Point number 9 is clear or not? Point number 9 is clear or not? Point number 9 is clear. Point number 9 is clear. Point number 9 is clear, right? So government has allowed you. Government already allowed you. So point number 9 is clear. Point number 9 is clear. Yes, Viraj. Good. Done, Purvi. Okay. Point number 10. ECB by entities under restructuring. ECB facilities for refinancing stressed assets. An entity which is under a restructuring scheme, corporate, CIRP, IBC code, can raise ECB only if it is specifically permitted under the resolution plan. Then you can raise, otherwise you can't. Eligible corporate borrower who have availed rupee loan domestically for capital expenditure in manufacturing or infrastructure sector and which have been classified as NPA, right? Means you have not paid back the amount or interest within 90 days. Can avail ECB for the repayment of these loans. Means you can take the fund from outside India to repay our amount. Under any one-time settlement with the lender, lender bank are also permitted to sell through assignment such loans to eligible ECB lender. Then they will transfer the loan amount to them. Lender banks are also permitted to sell through assignment such loans to the ECB lender, provided the resultant ECB complies with all-in cost, minimum average maturity period, other relevant norms of the ECB framework. Right? This you need to remember. Foreign branches, overseas subsidiaries of Indian banks are not eligible to lend for the above purposes. The applicable MAP strictly complied under all these circumstances. Eligible borrower under the ECB framework who are participating in the CIRP under the IBC as resolution applicant can raise ECB from all recognized lender except foreign branches or subsidiary of Indian bank for repayment of rupee term loan of the target company. Such ECB considered under the automatic route given under para number 5. Okay. 11th point, dissemination of information. For providing greater transparency, information with regard to the name of the borrower, amount, purpose, maturity of ECB under both automatic and approval route are put on the RBI website on a monthly basis. This is the report we are talking about, right? I think so. Now you can check. This is the report, right? Dissemination of information. This is the report from RBI website, which we have downloaded. Okay. Compliance with the guidelines. The primary responsibility for ensuring that the borrowing is in compliance with the applicable guidelines of the borrower concerned. Any contravention of the applicable provision of ECB guidelines will invite penal action under the FEMA. The designated AD category 1 is also expected to ensure compliance with the applicable ECB guidelines that we need to check. Now, so this is your ECB concept. You can go through the charts. Okay, no issues at all. ECB by companies. Okay, this is your import export. Okay. Now we need to complete one more topic, that is called ODI concept, right? Just a minute, I can add that topic. Okay, now we are going to see the ODI concept. This is the simplest one. Overseas direct investment. Just a minute. Okay. ODI charts. Now, we need to complete that topic also. This is your ODI concept, right? Overseas direct investment rules. Now, foreign exchange management. So that was our ECB part. Now there is a concept of ODI investment rules 2022. These rules are new one notified rules. So what is the concept? Overview. In exercise of the power as provided in this section 4647. Section 4647 talks about the government has a power to make rules, right? And according with these rules and removal of the previous regulation, these regulations are removed, right? And they have introduced this concept, right? Overseas investment rules. Now, what exactly is this one? So we need to go by the definition. Rule 218 talks about the act. Act means FEMA Act. Now, there's a different definition that is called control, right? So what is the meaning of control? Control means right to appoint the majority of directors, that is control. To control the management policy decision accessible by the person individually or in concert. Management, you are exercising the management rights. We can say that you are exercising a control. Shareholder agreement, you are exercising the control. Voting agreement that entitle at least 10% or more of the voting rights in the entity, we can say you are exercising the control part, right? Rule 21B talks about the authorized dealer. Authorized dealer, the same person who is mentioned under section 10, right? I will upload this chart also on the portal, right? Don't worry for this. So this is your second chart. The main is definition of control prescribed under Rule 21C, and rules is specified for foreign exchange management overseas investment rules 2000, right? Now, third chart. Third chart talks again definition part. What is disinvestment? So everybody knows what is disinvestment. Disinvestment means partial Full extinguishment of right, title, possession of equity capital acquired under this rule. So we are extinguishing either partially or fully, that we can call as a disinvestment. Equity capital means equity shares, perpetual capital, irredeemable instruments, contribution to non-debt capital other than debt capital of a foreign entity in the nature of fully or compulsory convertible instruments, right? That is called equity capital, right? You can read out the main important definition. First, disinvestment is not altogether important. Important definition first is control from second chart. From third chart, equity capital is a little bit important. Now, fourth chart talks about the ODI. ODI means overseas direct investment, means investment by way of, first point, you are acquiring acquisition of unlisted equity capital of foreign entity. You are acquiring unlisted equity capital of foreign entity. We can say this is a ODI, right? First point. Or you are not acquiring an unlisted entity. You are you become a subscribers to the memorandum of an association. Means you are a part of the incorporation of this company. So we can say this is a ODI. Investment in 10% or more of the paid up share capital of a listed foreign entity, that will also come under the concept of ODI. First point, acquisition of unlisted equity share. Second point, subscription through memorandum. Third point, investment in 10% or more. And last point, investment with control, where investment is less than 10%. But if you can recall the definition of control, right, that is covered under this concept of ODI. Example, explanation. For the purpose of this clause, where an investment by a person resident in India in the equity capital of a foreign entity is classified as ODI, provided such investment shall continue to be treated as ODI even if the investment falls to below that limit of 10%. Or the person, means once you are in the category of ODI, you will remain in the category of ODI irrespective of limit fall or irrespective of losing of control. This is your concept, right? So that definition of ODI is also important. Acquisition of unlisted equity capital, subscription as a part of MOA, investment in 10% or more of the paid up equity capital, investment with control with capital of 10%. Overseas investment. This is your overseas direct investment, that is called ODI. Now OI means you have committed to someone, or there is a concept of OPI, right? Financial commitment or overseas portfolio investment by a person resident in India. We can say that this is an overseas investment, right? Now, both have a different definition. Financial commitment defined under 21F, OPI defined under 21S. Now, financial commitment means, obviously, the financial commitment is a term which says some kind of guarantee, some kind of assurance. Means the aggregate amount of investment made by a person resident in India by way of ODI, debt instrument other than OPI, means remaining this one, OPI. Entities in which ODI is made and shall the non-fund based facility extended by such person to on behalf of such foreign entity or entities, right? This is called financial commitment. Now, what is OPI? OPI means any investment other than ODI in financial securities, portfolio securities. You can link that, but not in any unlisted debt instrument or any security issued by a person resident in India who is not in any IFSC. Right? provided that OPI by a PRII in the equity capital of a listed entity, even after its delisting, shall continue to be treated as a OPI until any further investment is made in the entity. So that is called, that is called overseas investment. There is a definition of financial commitment. Examiner can ask a definition from financial commitment or from OPI also. Now, rule 3 is simple rule, right? Administration of these rules. The rule shall be administered by the RBI. RBI will issue directions, circular, instructions, clarification as it deems it necessary for the effective implementation of provision of these rules. Rule 4. Non-applicability of rules and regulation relating thereto in certain cases. Any investment made outside India by a financial institution in an IFSC, right? So that rule of ODI will not apply. Any investment made outside India by a financial institution in an IFSC, because IFSC is an Indian entity. Acquisition or transfer of any investment outside India made out of RFC fund, RFC resident foreign currency account, if you can recall, current account transaction, that is also a different one. Or in accordance with the section 6.4. Section 6 deals with the capital account transaction. Second point, out of foreign currency resources held outside India by a person when he employed in India for a specific duration, irrespective of length thereof, or a specific job assignment duration that does not exceed 3 years, right? So that will, over this type of investment, rule 4 will not apply, right? So rule 4 is quite important as far as examination is concerned, right? Rule 4 is important point. Now, rule 5 talks about the debt instrument and non-debt instrument. What are debt instrument and what are non-debt instrument? The following shall be the debt instrument. The whatever item is mentioned below, that all are treated as a. The following shall be the debt instrument. 1, 2, 3, 4, 5. And these are the non-debt instrument. Now, what are these? First is government bond, debt instrument. Corporate bond, debt instrument, means bond of any category issued by government or private will fall under the concept of debt instrument. All tranches means series of securitization structure which are not equity tranches, they are not related to the equity, that will fall under the debt instrument. Borrowing by firm through loan, obviously debt instrument. Depository receipt, ADR, GDR, whose underlying securities are debt securities, that will fall under the debt instruments, right? You all are getting this one or not getting? You are getting ODI concept or not? Overseas direct investment. We Indians are going to invest outside India. You all are getting this one? Charts I will upload, no issues at all. Right? So these all are debt instruments. Now, what are non-debt instruments? First point, all investment in equity in incorporated entity, public, private, listed, unlisted, these all are non-debt instrument. Equity portion is there. Capital participation in LLP, obviously non-debt instrument, because they are not category of debt part. All instruments of investment such as recognized in the FDI policy from time to time, this will fall under the concept of non-debt instrument. Investment in AIF, alternate investment fund, AIF. REIT, real estate investment trust. Infrastructure investment trust. Investment in units of mutual fund or ETF, which invest more than 50% in equity, that will be treated as non-debt instrument. The junior most layer, that is equity tranche of securitized securitization structure, acquisition, sale, dealing directly in immovable property, contribution of trust, depository receipts issued against equity instruments, right? So these all are categorized as under Rule 5, debt instrument, non-debt instrument. Correct? Next is simple one. Rule 6 talks about continuity of certain investment. So law has clearly specified any investment or financial commitment outside India made in accordance with the Act, rules, regulation held as on the date of publication shall be deemed to have been made under this. Means on the day that regulation is applied. So any investment made under the earlier Act or any commitment as on the date of this regulation will be treated that you have done under this regulation. So that is a continuity of certain investment. Rule 7, right issue bonus shares. Any person resident in India, PRII, who has acquired or continues to hold equity capital of any foreign entity. Equity capital means you are holding the foreign, for example, you are holding equity capital of Apple, right? May invest in the equity capital issued by such entity as a right issue. If Apple is launching their right issue, so PRI can invest in this one, or if they are issuing the bonus shares, then also PRI can invest. Means they are same as Indian investors. The PRI, person resident in India acquiring the rights under sub-rule 1 may renounce. They have a same right as an Indian person, as an Indian existing investor have right of renunciation, right? In respect of bonus shares, in respect of right issue. But for this one, right? For the bonus issue only, sorry, for the right issue only, not for the bonus, because they have mentioned sub-rule 1. Rule 8. Okay. Prohibition on investment outside India, save as otherwise provided in the Act or these rules, regulations, made, directions issued under the Act. No person resident in India shall make, transfer any investment or financial commitment outside India. So this is prohibited, right? Now, Rule 9 talks about the overseas investment. Rule 9 talks about the overseas investment. Now, first point, any investment made outside India by whom? By a person resident in India shall be made in a foreign entity engaged in a bona fide business activity. You are not eligible to fund any kind of fraudulent activity. Notwithstanding anything contained in Foreign Exchange Management Overseas Investment Regulations 2022, central government may, if any application is made by RBI, permit financial commitment in strategic sector above the limit fixed in the rules. If any application is forwarded by RBI to the central government, then rules can be extended, limit can be extended. RBI may, on an application made to it through by AD Bank, permit a PRII to make or transfer any investment or financial commitment outside India, subject to conditions laid down, provided that overseas investment by a PRII shall not be made in a foreign entity located in a country as decided by central government. Means if they are covered under the FATF, then if they are not covered by the FATF, then they are disregarded. Compliant company. Provided further that the OI, overseas investment or transfer of such investment, including swap of securities. If you have any doubt, you can let me know the rules also. In a foreign entity form registered incorporated in Pakistan shall require prior approval of central government. If you are doing any investment with the entity registered with the Pakistan, then in that case you need to take the approval of RBI government. The RBI, if it consider necessary, may in consultation with the central government stipulate the ceiling for the aggregate outflow during any financial year or an account of financial commitment or OPI. Stipulate the ceiling means they are fixing the ceiling part, beyond which the amount of financial commitment by a PRII in a financial year shall require its prior approval. Right? For this, you need to take the approval. So this is your rule number 9. So rule number 9 talks about if you are entering into any transaction with the entity incorporated registered in Pakistan, take the approval of central government. RBI can enhance the limit with the help of central government. RBI can make any application to authorized dealer, allow any PRI to make or transfer the fund. NOC. Any PRII who has an account appearing as a NPA, PRI NPA account. I have my account is NPA, right? Is classified as a willful defaulter by the bank, or is any investigation is conducted against by CBI, Directorate of Enforcement, SFIO, Section 212 of the Companies Act, right? Shall, before making any financial commitment, disinvestment, obtain a NOC from lender bank, financial body, investigating agency by making an application in writing to such authority. Yes, RCOM is a NPA. Provided that where the lender bank or regulatory body or investigative agency concerned fails to furnish the certificate within 60 days from the date of receipt of such, it may be presumed that there was no objection to the proposed. Means you need to wait for maximum 60 days. 60 days, this is by default, permission is granted. Kingfisher Airlines, yes, IBC is conducted, right, against this company. The NOC issued under sub-rule 1 shall be addressed by the lender, bank, regulatory body, investigation agency concerned to the designated AD bank with an endorsement to the applicant. Right? So this is your NOC part. NOC part, examiner can ask the question. You need to remember this concept NOC. Now, regulation 11 is there. Manner of making ODI by an Indian entity. Schedule 1. Manner of making ODI by Indian entity. First chapter. Manner of making ODI by an Indian entity. Make ODI by way of investment in equity capital for the purpose of undertaking bona fide business activity. Right? Equity capital. The ODI may be made or held by way of, first point, same concept, subscription as a part of MOA or purchase of equity shares, acquisition through bidding or tender procedure, acquisition of equity capital by way of right issue or allotment of bonus shares. Capitalization means you can make an investment in this form. Either you can be a subscriber of memorandum of association, or you can purchase these shares, or you can purchase the share through a bidding process, or you can acquire the right issue bonus shares. Fourth point, capitalization within the time period, if any, specified for realization under the Act of any amount due towards the Indian entity from a foreign entity, the remittance of which is permitted under the Act, and it does not require permission of central government or RBI. Means there should not be any kind of approval required from any regulatory body. Or you can also invest via swap of security, by exchange of security, or merger, demerger, amalgamation, any security, any scheme of arrangement as part of applicable laws in India. So you can make investment in any of this way that is allowed. Right? Subscription, bidding, right issue bonus shares, capitalization part, swap of securities, merger amalgamation. This is your first chart of Schedule 1. Now, ODI in financial service activity. Right? ODI in financial service activity. An Indian entity engage in financial service activity in India makes an ODI in a foreign entity subject to condition. The Indian entity, if you have posted any kind of profit, then only you are eligible to make an investment outside India. Has posted net profit during the preceding, right? Have posted net profit during the preceding 3 financial year, then you are eligible. First condition. You are registered, regulated by any financial service regulator in India, then this is allowed. You have obtained the approval as required from the regulator, then this is allowed. And both in India and the host country of jurisdiction, as the case may be, for engaging in such financial services, then only you can make any ODI. An Indian entity not engage in financial service activity. There may be a case like Indian entity is not engaged, right, in India now, and they want to do the ODI, may make ODI in foreign entity which is directly, indirectly engage in financial service activity except banking and insurance, subject to the condition that Indian entity has posted net profit in the preceding 3 financial year. If an Indian entity does not meet the net profit requirement during the COVID-19 time period, financial 2021-22, then the financial results may be excluded, right? So there is an exemption part for COVID time. Now, Schedule 1, third chart, limit for financial. What is the limit for commitment? This is important, right? And you need to remember that limit also. The total financial commitment made by Indian entity in all foreign entity taking together at the time of undertaking shall not exceed how much? 400% of its net worth as on the last audit balance sheet date as directed by RBI in consultation with central government. For example, A Limited is an Indian entity and that company wants to invest in foreign entity, say for example, these 10 entities. So what the law has specified, that your net worth, you can invest maximum 400% of your net worth, right? The total financial commitment shall not include capitalization of retained earning, means whatever amount you have transferred from reserve to capital, that is excluded for calculating such limit, but shall include, both are included. First point, the utilization of amount raised by ADR, GDR, that is included, or stock swap of such receipts, utilization of ECB proceeds to the extent corresponding pledge or creation on charge on assets, right? So that is allowed. So while calculating the limit, you are not supposed to take the capitalization of capitalization of general reserve, but you can take whatever amount you receive from ADR, GDR or ECB proceeds, that amount can be taken while calculating the limit. Provided that the financial commitment made by Maharatna Company, Navaratna, Mini Ratna, subsidies of such public sector undertaking, BHEL, CEL, RAIL, in foreign entities outside India engage in a strategic sector shall not be subject to the limit laid down under this paragraph. Now, Rule 12. Rule 12, what is the manner of making an ODI? By whom? By Indian entity. Schedule 2, right? Before this, all are Schedule 1, first, second, third chart. Now, Rule 12, what is the manner of making ODI by Indian entity? OPI. By an Indian entity may make OPI which shall not exceed 50% of its net worth. In the first schedule, limit is 400%. Now here OPI portfolio investment is 50%. And 50% net worth needs to be calculated as on the audited balance sheet date figures. A listed Indian company may make OPI including by way of reinvestment. An Indian entity make OPI only under clause of para schedule 1 as mentioned in subpara 2, right? Now, little bit more important. Schedule 3. And it talks about the Rule 13, manner of making OI by resident individual. We are making the investment outside India. Manner of making OI. Any resident individual may make ODI by way of investment in equity capital or OPI in the manner provided in the schedule. So I can make investment by ODI by OPI, right? Both way. But this is subject to the LRS limit. LRS limit is $2.5 lakh, right? Liberalized remittance scheme, FEMA, Schedule 3. A resident individual may make or hold overseas investment by way of ODI in the operating foreign entity, not engage in financial services activity which does not have any subsidiary or step down subsidy where the resident individual is controlling the foreign entity. So means single entity. OPI including by way of reinvestment, or ODI or OPI as the case may be by way of first capitalization within the time period if any specified or realization under the act, swap of security on account of demerger, merger, change of security, acquisition of capital, right issue, bonus shares, gift, inheritance, sweat equity shares, acquisition of minimum qualification share issued by holding a management post in a foreign entity. Means you need to acquire certain shares for holding that post. So that will also count under this concept of investment. And acquisition of shares or investment under ESOP. So ESOP is covered, minimum qualification shares is covered, swap equity, inheritance, gift, right issue, bonus shares, or whatever shares you are getting by account of swap of securities on account of merger, demerger, amalgamation, that will be counted, or capitalization of securities. Provided that ODI in respect of point E, F, G, inheritance, sweat, and minimum qualification, and H, ESOP, 4 points, may be made in foreign entity whether or not such foreign entity is engaged in financial services activity or has subsidies or step down subsidies where the resident individual has control, right? So law has clearly specified, like for point E, F, G, and H, you can do investment in foreign entity whether or not such foreign entity is engaged in the financial activity or not. So there is no connection. Provided further that acquisition of less than 10% of equity capital, whether listed or equity, of any foreign entity without control under clause FGH shall be treated as a OPI, portfolio investment, right? Portfolio investment. If you are a holding investment part, then this is treated as a ODI, otherwise OPI. Schedule 3rd, second chart. Acquisition by way of gift or inheritance. A resident individual may, without any limit, no limit is prescribed, acquire foreign securities by way of inheritance from a person resident in India who is holding such security in accordance with the Act, or from a person resident outside India. So you are receiving that amount. Law has clearly specified there is no limit. Whatever amount he is ready to give you, you can take that up. A resident individual without any limit may acquire foreign securities. Resident individual without any limit may acquire foreign securities by way of gift from a PRI who is a relative and holding such security in accordance with the. A resident individual may acquire foreign securities by way of a gift from PROI in accordance with the FCRA, Foreign Currency Regulation Act 2010. You need to comply, right? Schedule 3rd, third chart. You need to go through that charts again and again, minimum 3 to 4 times. Then only you can little bit Recall the provision. Acquisition of shares or interest under ESOP plan, ESOP benefit scheme, or sweat equity shares. An resident individual who is an employee of a company, is a director and a director of an office in India, branch of an overseas entity, a subsidiary in India of an overseas entity or an Indian entity, in which the overseas entity has direct and indirect equity holding, may acquire without limit shares interest under which plan? ESOP plan, employee benefit scheme, sweat equity. So that is allowed. Offered by such overseas entity, they are distributing to everyone. That's why on a uniform basis. Now, what is indirect equity holding means? Indirect foreign equity holding through a special purpose vehicle. Some instrument is derived. Employee benefit schemes means any compensation or incentive given to the director, employees of an entity, and which gives such directors, employees ownership interest. You are feeling like you are the owner of that entity. So that's why ESOP is granted. Rule 14. OI, overseas investment by a person resident in India other than Indian entity and resident individual. ODI by a registered trust or society, any person being a registered trust or registered society. And they are engaged in which sector? Education sector or hospital sector. May make ODI in foreign entity with the prior approval of Reserve Bank of India, subject to condition. First, the foreign entity is engaged in the same sector in which the ODI, in which the Indian entity is engaged. First point. Second point, the trust or the society, as the case may be, should have an existence. It should not be a newly incorporated. It should be a 3 years old minimum. The trust deed in case of trust or memorandum of association or rules or any bylaws in case of society permit for such ODI, means they have permitted for your investment. Such investment have the approval of trustee. You need to take the approval of trustee also. In case of trust, governing body or council in case of managing or society. In case the trust or the society requires a special license or permission from MHA, Ministry of Home Affairs, central government, or from relevant local authority, as the case may be, the special license permission has been obtained and submitted to the designated authorized dealer bank, right? You need to take the approval from the department and you need to submit also. So that is your rule number 14, right? Now, rule 14, second chart. ODI by whom? Mutual fund or venture capital fund or alternate investment fund. You can recall these provisions, right? MF stands for mutual fund, VCF venture capital fund, AIF alternate investment fund. A mutual fund, venture capital fund, or AIF may acquire or transfer which security? Foreign security, but that transaction should be routed through the authorized dealer part only, not from any other source, and that should be permitted as per the RBI. You are not doing the cryptocurrency type transaction, right? Provided that the aggregate limit for such investment shall be decided by the RBI in consultation with central government. Provided that individual limit shall be decided by the SEBI. Notwithstanding anything contained in these rules, any investment under these rules by mutual fund, venture capital fund, AIF shall be treated as a, obviously, it will be a OPI, portfolio, overseas portfolio investment. Opening of Demat account by CC. CC stands for Clearing Corporation of Stock Exchange, clearing member. Any person being approved by SEBI, Clearing Corporation of a Stock Exchange or clearing member, may acquire, hold, transfer. Acquire, hold, transfer. What? Foreign securities offered as collateral by FPI, subject to the guidelines. First point is open and maintain demat account with the foreign depository. Second, remit the proceeds arising out due to the action. Third, liquidate such foreign security, repatriate the proceeds there to India. Right. So these are the provisions with respect to demat transactions by CC. Rule 14, Schedule 4th, acquisition and transfer of foreign securities. By whom? By Domestic Depository. Depository Act 1996 may acquire, hold, transfer foreign security of a foreign entity being the underlying securities to issue IDR. IDR, remember the section number 390 is there, as authorized by such foreign entity and its overseas custodian bank, right? Overseas, obviously, when any company is executing the IDR concept, there should be a intermediary involved that is called overseas custodian bank, right? The person investing in IDR may either be sell or continue to hold foreign securities in accordance with this regulation. Acquisition and transfer of foreign securities by whom? By authorized dealer bank, including its overseas branch, may acquire, transfer foreign security in accordance with the terms of the host country in the normal course of its banking business. Now, Rule 15, Schedule 5, overseas investment in IFSC by PRII. Now, IFSC is an Indian Financial Resource Service Center, right? So that is incorporated in India. Subject to the FEMA rules, a PRI may make overseas investment in IFSC as per the Schedule 1 or Schedule 2 or Schedule 3 or Schedule 4 in any of the day, provided that in case of an ODI made in a IFSC, the approval of financial service regulator concerned shall be decided within 45 days from the date of application, and if no approval is received within 45 days, the transaction is deemed to be approved. Second, an Indian entity not engaged in financial service activity in India, except banking insurance, does not meet the net profit condition, may make ODI in IFSC. You can make ODI in IFSC, no issues at all. A person resident in India may make contribution to investment fund or vehicle set up by an IFSC as a OPI. This is allowed for person resident in India, and that is ODI, right? A resident individual may make ODI in foreign entity, including an entity engaged in financial service activity, except in banking and insurance, in IFSC if such entity does not have any subsidiaries or step down subsidiaries outside IFSC, where the resident individual has control in the foreign entity. Take little bit patience also. So we have for a 1 chart, 2 chart, 3 charts. Little bit patience more required, maximum 10 minutes. Okay. Now, Regulation 16, these are the simple one, right? Regulation 16 talks about the pricing guidelines. The issue or transfer of foreign equity, or the issue on transfer of equity capital of a foreign entity from a PROI or PRII to a PRII. This, you can take this or this. Who is eligible to make such investment of from a PRII to a PROI, subject to condition the price arrived at the arm length price basis? Means there should not be relationship, should not affect the price. For calculating the ALP, valuation needs to be adopted as per the international method, provided that these two conditions shall not be applicable in case of merger, demerger between two or more foreign entity that are fully owned subsidiary. Rule 17, transfer or liquidation. A PRI holding equity capital may transfer such investment as per the rules and regulations. A PRI may transfer equity capital by way of sale to a PRI who is eligible to make such investment to a person resident outside India. Means he can transfer security also. In case the transfer is on account of why we are transferring, because of merger, amalgamation, demerger, or account of buyback. The such transaction should be approved by the competent authority. And where the disinvestment is by a person resident in India pertains to ODI, the transferor in case of full disinvestment other than by way of liquidation shall not have any dues outstanding for receipt. Means NOC hona chahiye, NOC required, which such transferor is entitled to receive from the foreign entity as an investor in equity capital or debt. And that transferor in case of full disinvestment must have stay invested. Minimum period of holding is 1 year is required. Right? Rule number 16 and 17 is clear. You can ask a query if you have any doubt. Restructuring. A person resident in India who has made ODI in foreign entity may permit restructuring of balance sheet by such foreign entity which has been incurring losses of previous 2 years, as evidenced by the latest audited balance sheet, subject to diminution in the total value of the outstanding dues towards such PRII on account of investment in equity or debt portion. After such restructuring, such not exceeding the proportionate amount of the losses. Means after the restructuring, that losses amount should not exceed, provided that in case such diminution as certified by the registered valuer as per the Companies Act, where the amount of corresponding original investment is more than USD 10 million, or the amount of such diminution exceed 20% of the total value of outstanding dues towards the Indian entity, that should keep in mind, provided that the certificate dated not more than 6 months before the date of the transaction. So you need to provide the certificate within 6 months from the date of transaction. That was your rule number 18, prohibition and restriction. No, and this is a simple concept here. No person resident in India shall make ODI in foreign and in real estate. For outsider, India is not permitted. For same thing is not happening outside also. Gambling, dealing with the financial product linked to Indian rupees without specific approval of RBI. And ODI in startup recognized under the law of host country. Law of host country means foreign country. Shall be made by an Indian entity from an internal accruals, whether from Indian entity, group, or associate company in India. So you can make any investment. And in case of resident individuals, from own funds of such individual, that is allowed. No person resident in India shall make financial commitment in a foreign entity that has invested or invest into India at the time of financial commitment or any time thereafter, resulting in a structure more than 2 layers of subsidies. That restriction of 2 layers of subsidy will not apply in case of banking company, NBFC, insurance, and government company. Right? The restriction will not apply for 4 types of company. And what is real estate activity? This is a real estate activity. Buying and selling of real estate, trading in TDR, but does not include development of township. If you can recall, we already completed one example also, development of township. That is allowed, right? Construction of residential, commercial premises, road, bridges, that all are allowed. That will not fall under the real estate activity. Examiner will ask a question. One foreign company or you want to make investment outside India for the construction of township, whether this is allowed? Yes, this is allowed. Rule 21, restriction on acquisition of transfer of immovable property outside India. First point, no person resident in India shall acquire or transfer any immovable property which is situated outside. I am not eligible to acquire or transfer any property which is situated outside India. I need to take the approval of RBI. Provided that nothing contained in this rule shall apply to a property. First point. Held by a PRI who is a national of a foreign state. I have a citizenship of America also. I can sell, no issues. Or I have acquired on or before 8th day of July 1947 and continue to be held by such person with the permission of RBI, then I can sell, transfer. Acquired by a person resident in India on lease not exceeding 5 years, then also I can transfer, no issues at all. Now, what this say? Notwithstanding anything contained in sub rule means in that provision you can do, no issues at all. A PRII may acquire immovable property outside India by way of inheritance. My John uncle is there, he want to gift me American Nariman point. I can accept, no issue at all. Right? Gift or purchase from a PRI who has acquired such property as per the FEMA provision in accordance with the time of acquisition. So I can accept. A PRI may acquire immovable property outside India from a person resident outside India by way of inheritance, allowed. By way of purchase out of the RFC account money, allowed. By way of purchase out of the remittance sent under LRS, allowed. Jointly with a person relative who is a PRY joint property, allowed. Out of the income or sale proceeds of assets other than ODI acquired or overseas under the provision of this act, that is also allowed. So a person resident in India can acquire the property from these sources. Remember this one, rule number 21 is important as far as examination is concerned, and that was your first chart, and this is your second and last chart of ODI. Now, an Indian entity having a overseas office. Indian entity having a overseas office. That will make this span. Okay. May acquire immovable property outside India for the business or residential purpose of its staff as a direction issued by the RBI. So Indian entity can acquire. A PRII who has acquired any immovable property outside India as per the FEMA transfer such property by way of gift to a PRII who is eligible to acquire such property, first point, or you can create a charge, or you can hold such property of an investment in immovable property transfer in any manner shall not be permitted if the initial investment in immovable property was not permitted under the Act. If the earlier investment is not permitted, then the proceeds of that investment is also not permitted. Right? So that is your ODI, overseas investment, ODI, overseas direct investment, OPI concept, ODI concept, ECB concept, person resident in India, foreign export of goods and services, import of goods and services, adjudication part, each and everything we have completed the FEMA. So our FEMA is complete. Finally, it is completed. So is there any doubt? Let me know. I need to upload the MCQ part. I need to upload the ODI charts. Okay. That is pending from my side. I can upload. Is there any doubt? Is there any doubt? Yes. Purvi, before this, you have mentioned, I already told you I will upload. Is there any doubt? Other than this. Okay. So we will take a pause here. Thank you for a patience listening of this FEMA concept, altogether different, right? If you have any doubt, you can just mention this one. Thank you, Purvi. Thank you, Viraj. Thank you.